Hi everyone, this is Will. Just wanted to walk through third part of how I'm continuing to use the HELOC and just provide some up-to-dates. And using the HELOC, the home equity line of credit, I am taking all income that I receive, dumping it into the bank. From the bank, I put it into a home equity line of credit that I obtained in April. From there, this is acting as my main operating account. Within that, in July and August, I paid credit card payments, mortgages, student loans, HELOC, paid water bill, power bill, T-Mobile. Myself, I took a draw to pay some bills. I paid my rent, lease, where I'm at for my apartment and all my utilities inside of this HELOC. Also miscellaneous things I paid with checks and utilities. Ran into a bit of trouble because I was only receiving sets of 5 checks at a time for this particular HELOC. So there was a lag time between a couple of weeks when I was getting more checks and being able to write it. I know some advocates have indicated you can treat this HELOC like a checking account, and that may be the case on some other ones. But for me, this particular HELOC that I have has a time frame of about 2 to 3 weeks before I get some more checks. I'm limited to about 5 checks until I get a different HELOC in general. This HELOC itself, the statement date, I mean the cycle of the HELOC generally runs from the 9th of one month to the 8th of another month that I can make all these charges in, and then it goes to another cycle. It generally reports to the credit bureau whatever the balance, either the 29th or the 30th of the month. I'm pairing this HELOC also with a credit card to hold down the charges. I mean, the checks that I write on the HELOC. I can't charge it because I don't have a credit card. I don't have a debit card. It's mainly checks that I'm using. So I'm pairing this HELOC and or I paired this HELOC with uh, about 5 different credit cards in the month of July and August. That was a little bit more work than I wanted to do. So now I'm trying to pare it down to only one credit card that I put daily, monthly, weekly, and some annual expenses. I will still use the HELOC 5 checks that I receive periodically to mainly do the mortgages, the student loan, and to pay the HELOC itself. And everything else, I'm gonna try to get onto this one credit card so that I can see one bill and generally keep a little bit better track of it. Here, I attempted to do what's called bill matching a bill with a credit card to kind of save some money and put some other strategies in place. I think I may back off of this strategy of bill matching for just a moment and really look at just this one credit card charging my daily, monthly, weekly, and annual expenses. This credit card and all the other credit cards, if I go back to another one, generally has closing dates of the 26th to the 29th. So that gives me a couple of weeks after this closes to then pull money off of it to give the HELOC chance to report the lowest balance to the credit bureau, and then I'll pull some money off of this HELOC to pay off whatever credit card I have. So that's in general what I just wanted you to update to. I'm pulling back on using multiple credit cards. Here, last month, I use Wells Fargo, I use B of A, I use American Express. So I had multiple, and I use Navy Federal. So last month in August, again, I had multiple credit cards to try to keep this HELOC low until I was able to pay it off or as much as I could before the closing date. So I'm gonna try it again for September. Really concentrate hard on trying to stay with one credit card at 18% for my daily, monthly, weekly. So purchasing gas, groceries, going to the store, shopping on this credit card and pay it off before the closing date. I adjusted all of the credit cards to be between 26th to 29th, so I don't have to really put as much onto the HELOC, which is my main operating account, until I can get maybe a different HELOC that gives me a credit card, um, a debit card, and checks and checking account. Right now, I'm just with this HELOC is mainly a checking account. Um, and this may be the case because this one is on a investment property in general, because I live in an apartment and all my properties are occupied in general, and I just take the tax benefits from them and just try to run my business the best way that I can through that, and try to utilize as many tax breaks as I could. So just a general update of the strategy as it has shifted from using multiple credit cards to trying to really concentrate on one card, letting this HELOC be what's called my main operating account, and I'm paying all my bills through there. Okay, so again, I am a political economist. I am not an attorney. I'm not a CPA. I'm not a financial advisor. I'm just providing my real world experience of how I have been using credit cards and HELOCs as lines of credit to reduce my debt. If you have any questions, my phone number and email is in the box below. Just give me a call, and if I can answer some of your questions on how you can use these as strategies, definitely give me a call or email. You have a great day.